Hey everybody, welcome. It is Mark Coe for 6th of June. I wanted to take a look at a currency that has been pretty sideways and starting to actually see some movement lower against the dollar. So we're seeing some yen strength, dollar weakness, and I wanted to take a look at dollar yen from the recent weeks and kind of talk about some of this activity that we're seeing how. So overnight, dollar yen breaks down from the 110.50-ish area and breaks lower. And so given a little perspective of what's going on in this move, we had a dollar yen that gapped higher in late April, right? Gaps higher in late April, and 109.60 was the low, were the lows that were contained. So some markets have gone back and tested those late April, and that, just to refresh your memory, that is French elections where the market got a lot of upside, equities went higher, dollar yen traded higher. And dollar yen's been on a very bullish tone since then. That takes us 108 up to above 114. And we've seen nothing but kind of pullback since the 114 level. Today's action down below 110, you can see, takes out that 109.60 level. So we continue to see yen strength, continue to see that yen strength. But in kind of diagnosing this and how we move forward, I think you want to be able to look at a little longer term and understand that you're still in wider, longer term time frames trading range, right? So if you were to take a look at dollar yen on a weekly basis, and I know that may sound strange looking at all you're talking about is day trading or very short term scalp trading, but look at it on a weekly basis and think about where dollar yen is traded and what kind of ranges have held. So this 100 area has held gone back several years. The top side, resistance, the top side of this whole 100 to 125 trading range, you're about in the middle of it up to that 114, and now you're seeing dollar yen start to break lower. In terms of a level of focus, this 108 didn't have a huge reference point on the last visit, and it was just a point where the dollar managed to stabilize and traded higher. But the idea of looking at it from a preferred direction, a preferred bias, means being able to look and see what bigger picture money is doing. What are big players doing in dollar yen, in currencies in general? So if you think about it, in the U.S., if the expectation is to raise rates, if the thoughts are that the economy is growing, wouldn't it make some sense that you'd have this underlying dollar strength? And so when you start seeing a yen that's stronger, right, and the yen, you're looking at relative rates, you're looking at all these different factors that can affect the exchange rate. But at the end of the day, when you look at levels where bigger money is put to work and you understand that there are bigger picture ideas at play here rather than the next 5 ticks or 10 ticks, you still want to give yourself that advantage of saying, where am I placing myself at the greatest advantage in dealing, right? It's not about an edge about having information that somebody else may not have. It's about the edge of you saying to yourself, I know where I'm willing to put money to work and I know where I'm wrong. And so as you work down, I always point out the ability to walk down from a bigger time frame, because where you see bigger money get put to work, you don't see it on a 5-minute chart. They may be acting, they could be adding to positions, trimming positions, but it's not going to have the same clarity. But when you start to look back and say, look, over a 3-year period, there have been buyers around the 100 level in dollar yen. They're directional in nature. And those same players, the same bigger money, has been working to put a cap on dollar yen on any move into 120. They didn't even allow it to get to 120. And if you start to understand where those biases come from, you're in wider ranges. And so taking that down, what you're trying to do is continuously focus on spots that give you some type of advantage in where you're willing to deal, right? And so as you work it down on a tighter time frame, you may not be dealing at areas that are heavily influenced by bigger term money. And so understand that. Understand when are you advantaged by dealing at bigger zones and when are you just dealing on flow type of mentality. And in dollar yen, it was a very fast ride up from those April 108 lows up to 114. But looking back at the market, if you are able to determine what levels the market's battling from, the market had put a cap of a dollar yen on the top side above 115. Tested 115 in January, retested it in January, retested it again in March. Didn't even allow it to go there in May. Didn't come back. So that means that sellers were more willing to step in earlier, right? So 6 big figures, this is the bottom edge. So that pressure stays mounted for a break on bottom edge. The sellers are getting rewarded for stepping into this market quicker. And so if you start to look and say, what edges are being created where? Top edge, keeps pressure on the downside. So dollar yen's an interesting currency because it's not playing along with this idea of a really strengthening dollar and outpacing the rest of the world. You're now seeing a lot more sideways action and bouts of dollar weakness. Dollar's been on a tremendous run since the late fall, since the presidential elections, taking us from 100 to 118, and now you're consolidating. But understand at what zones you have some type of a look and where you want to be positioned. So until the dollar buyers start winning these levels, that pressure is going to remain. And although that's a big, nice 6 big figure bounce, they weren't even able to take out these most recent highs. They didn't even challenge them. So to put it in perspective, it's good volatility, it's good short-term stuff, but bigger picture, they didn't take out those levels, and you're back on your way to be able to revisit those lows. So keep an eye on the longer term, understand how it fits into your trading plan, and keep good focus, good trades, and we'll talk to you soon. For June 6th, it's Mark Coe. Thank you, everybody. Cheers.